According to the Communication Commission of Kenya, over 90% of the mobile data subscription is through the mobile phone. This has caused a ripple effect, with leading telcos such as Safaricom reaping in enormous profits. Ndegwa filed this report on the industry at large.
Internet subscriptions in the country are dominated by mobile internet, riding on the increase of mobile penetration.
The subscriber base grew during the first quarter of this financial year by quite some numbers, and that growth is primarily attributable to the innovations that the firms have been executing in the market as they seek to grow and sustain their subscriber base.
90% of the internet usage happens through a mobile phone and not through a standalone instrument which is plugged to a dongle being plugged to maybe a laptop or something like that. It's not happening that way. Kenya is very high on data, which is very good, largely through a mobile phone. My understanding, the market, what we are talking about, 9 million, would be way higher than 9 million.
According to research by Communication Commission of Kenya, mobile internet presents 99% of total subscriptions, divided amongst the 4 mobile operators in the country.
For us alone, we see a number of close to around 1.5 million of users sitting out there. So as far as data is concerned, I would think the numbers are way higher, because the usage is so high for things like Facebook or Twitter or a POP email, or it could be just browsing.
We do expect voice, let me put it the other way around, voice will decline by maybe 2% per year, and therefore data needs to take up that slack.
But in data network, meaning when you talk about Orange data, we are a reference. Meaning people like to buy Orange because we have very good network quality. We give our promise, and we are really giving good services. And last target is corporate business market. Today, really, when you would like to have a good corporate business, they go to Orange.
Market leader Safaricom, the only listed mobile company in the country, posted a 21% growth in the mobile data revenue to 6.1 billion shillings in the financial year 2013, highlighting how important the market is to the bottom line of the mobile operators.
Well, non-voice revenue, which is data, SMS, and M-Pesa, is currently taking about 29%. It is important because voice will eventually start to decline. And as you start to introduce new technologies like LTE, you'll have voice over LTE, and therefore you need to get a new revenue stream coming through. So currently taking just under 30%, but will continue to grow.
Data per se contributes roughly around 10% to 11% of our revenues, which is substantial and which is increasing. People are using more data in terms of bundles than what it used to be. So it's not only that they are consuming just because of the rack rate which you throw as a per KB or a per MB rate. Now they are actually buying packs by which they get bundles. For the whole day they can use it at 39 shillings, or for a weekend at 49 shillings they can do both Saturday and Sunday unlimited usage. So those usages are going up.
Competition on the data market is not only among the mobile operators but other data providers like Access Kenya. But market leader Safaricom does not see this as a threat to its market share.
No, I think it's a market which is quite a healthy market. The market shares across the players are reasonably evenly split. I think dimension data coming in will probably accelerate some of the investment in the industry, but I think that's a good thing. That's a good thing. But the other thing to remember with Access Kenya is that often we are both serving the same customer because one is providing the redundant route for the other. So I think it's it's to be welcomed.
Riding on the growing use of smartphones to access the internet, mobile operators are investing more in the data services to reduce their reliance on the voice market.
We put around 4,000 fibers. We installed 2G, 3G network, and the 42 meg speed till now. And of course we have around 30 shops, and we have 1,700 colleagues working for us. I think during the 5 years, Telecom Orange focused to make the quality of services, to put the people in the middle of our interest, to be more focused in customers oriented.
2013 would be a year where you would see either a 3G or a 4G decision being made by us. We are still not very confident which way the industry is going to go. While 4G, certain fractions of the industry, of the government are pushing for it, we still have apprehensions because of the kind of mobile handsets which are required. The devices are not there. The cost of devices is very high. We are still not sure to what extent 4G, if it's done, will go. Will it be few towns or will it be all the county headquarters the way it is being planned? Would government be such a big customer what they were talking about, or they will not be a big customer?
Into fiber, which is part of the data solution, because without fiber you don't have the backhaul and you can't deliver the speed. We are running at about 500 kilometers a year, and over the next few years we'll probably spend about 10 billion shillings. We may accelerate that a little bit, and that is really dealing with the backhaul that's from the cell site back to the core network, but also feeding into some of our CBD, our business premises.
Players in the mobile internet market have a positive outlook on their investments.
Data is very small. But while data is small, in future data is going to contribute, in my understanding, close to around 25 to 28% of the revenues. And I'm talking about not 1 year, I'm talking about say 3 to 4 years time where it will actually contribute way larger. Margins in data are definitely going to be better than voice in this country.
The data market, I think, will grow. It's still small, but when you look at the rate of growth in the data market and compared with the voice market, you can see that the data market is very steep.